Hello, my friends. Brett Pattison here with Iron Global Advisors. Recently, I had a great opportunity to go to my 12-year-old's class in elementary in 6th grade, and I was able to discuss some important investing information that every kid in that 6th grade class got correct. The problem is very few investors understand these same simple things. Here's what we discussed in that 6th grade class. We discussed the importance of compounding your investments over time. I'm not going to spend a whole lot of time discussing that now. All of you should understand the importance of that principle, time and being invested, right? We also discussed the importance of collecting interest rather than paying it through credit card or other debt. Made perfect sense to these kids, but this is where it got fun, right? And this is what I want all of you to understand. It's how to select a good business, right? If we're going to make an investment in a business, because that's what we are, business owners, what are some things that business has to have or do for us to buy it? And these are the three things that we focus on. Very, very simple. We want a company that makes money consistently, right? We don't want a company that's not making money. Pretty simple. We want a company that we can buy at a good price. We want to buy a diamond at cubic zirconia prices, right? That's what we want. We want to buy something cheaply, and we want to buy something that gives back to its shareholders, something that rewards us for owning it, that fits into compounding your interest over time. And let me give you some examples, and I'll give you the same quiz that I gave these elementary kids. Company A versus Company B, which would you buy? So when it comes to making money, Company A, and we're just going to focus on earnings per share highlighted in yellow. Is it positive consistently? Is it negative consistently? Company A, you can see from 2009 to today, never made money, right? Came close in 13, but has never made money. In fact, 2015, you can see what's happening. Company B, over time, since 2007, has increased earnings on a per-share basis consistently. Company A versus Company B, which would you decide? Make a mental note. All right, can I buy the company cheaply, right? Can we buy a great product at a very, very cheap price? Company A, we look at forward PE. What is the forward price-to-earnings ratio moving forward? That tells us how cheap a stock or business is. And Company A, you can see there, 78.1. Company B, 10.3. Which one is cheaper? Company A versus Company B. Last question. Does the company give shareholders? We focused on dividend. Are they paying a dividend? Pretty simple. Company A, no dividend. You can see. Company B, yeah, they're paying a dividend right now, 2.2%, collecting basically interest on that investment. So as we look at Company A versus Company B, it should be a no-brainer to you sitting at home which would be the best investment. Let me unveil what these two companies are. Company A is Tesla. Tesla is one of the most popular stocks and has been for many, many years. People are, for some reason, infatuated with the company and love it, right? Which has increased the stock price in a very big way, which has made the stock expensive for whatever reason, future potential or something, right? Company B is one of the more hated stocks currently in the market today. It's Apple. It's trading at a very cheap price. Now, I'm not recommending in any way, shape, or form that you should short Tesla, buy Tesla, short Apple, buy Apple, or anything. Simple process in determining and removing emotions from your investment process. And more people would, if you just looked at the two companies, more people would say, hey, I want to buy Tesla than Apple, just because of what they hear in the news or what their friends are talking about. So what these 6th graders learned was to take the emotions out of it, focus on those three things to make good investment decisions, and over time, it will allow your money to compound, right? And you will accomplish your financial goals. That's what these 6th graders learned. Incredible process and opportunity teaching them. I hope you learned something as well.
This is a purely public broadcast and is not intended to be personalized financial advice for any individual's specific situation. Each individual's financial situation is unique, and the topics discussed on this broadcast should not be relied upon and/or considered as personalized advice. Specific financial securities discussed are not intended to address any listener's particular financial situation and should not be considered recommendations. This is for educational purposes only. For more information, please contact Iron Gate Global Advisors at info@igga.com or by calling 888-591-0334.